I'm Dylan Marma, and you're listening to Operators and Allocators, a podcast dedicated to exploring how to make smart investment decisions and execute well in real estate and private equity. We'll be interviewing top-notch sponsors from various asset classes to understand how they think and the frameworks that they put in place with the goal of achieving above-average risk-adjusted returns.
Welcome back, everyone. Troy and Dylan here to another episode of Operators and Allocators podcast, the RV Campground mini-series special. Today, we'll be talking about the different types of campgrounds, from which I understand there are several different types. So, Dylan, if you'd like to kick us off and elaborate more on the different types of campgrounds.
Troy, I'd be happy to. It's great to be back here. And again, we've got a lot of good feedback from our listeners. Now, with RV campgrounds, we always like to say this can be one of the most understood types of real estate, or the most understood alternative real estate asset type. And that is because every RV campground is different. Every RV campground is its own. We like to look at them like their own living, breathing organism. They have their own personalities. They have their own resident bases. And it's really important as an operator to understand what's attracting the people that are there to your campground and what's going to be the best use for that campground, so that you can make the most out of that and optimize your income and give yourselves the risk-adjusted return that you're striving for. So we've realized that while every campground is different, we can really boil them down into a few different subsets of campgrounds. And I'll caveat that it's not always easy to bucket them right away. But the more you look at it, you usually will find that it is more like one of these than it is the other ones that we're going to present. The four types of RV campgrounds are as follows. There's your extended stay workforce housing campground. There is your second home campground, or your annual stays. There are your short-term campgrounds, and there are what we like to consider your short-term resorts. So your extended stay workforce housing, this was actually our very first exposure into the RV campground industry. And it was actually through a deal that had half manufactured homes or mobile home park, and then half RV campground. And the RV campground, generally when we see these kind of deals, they're pretty common. The RV campground usually inherits more of a demographic similar to that of the mobile home community. And these are usually more of a purely utility focused place where people are going to live. And the ones that are connected to mobile home communities, oftentimes these are annual leases, or at least predominantly a lot of month-to-month leases. So this can be people from all walks of life, just of course, like mobile home communities can be people from any industry. But you also have some campgrounds that are not connected to mobile home parks that still fit the extended stay model. And these can be what traditionally has been referred to as your man camps, so to speak, where you have a lot of short-term workers. And I think it's gotten that name because a lot of times people think of the campgrounds that sit outside of the heavy oil and gas rigs, and they are there for several months at a time working on the site. You have a lot of blue-collar workers that are working temp jobs or contract workers. You also have a lot of traveling nurses that will stay in extended stay workforce housing. You also have even companies like Amazon has the Amazon Camper Force now, where they have temporary jobs throughout the year, where that for several months at a time, they will put their people up and give them a stipend to cover their lot rent for several months at a time. So again, it's not always fitting the stereotype of the man camp. You have people from all walks of life that use these, and these can vary in all different qualities and different amenity sets, but that's your extended stay workforce housing model. Then you have your second home campground, or these are probably more commonly known as your seasonal campgrounds. We've sort of geared towards one specific subset of this. But the seasonals or the second homes are where folks will usually park their RV on site and leave it there for either the entire season or sometimes for the entire year at a time. and they will pay for either the season upfront, which depending on where you are in the country can be the winter season in Florida or the summer season if you're in North Carolina or the Northeast. And they'll pay for the season usually upfront or sometimes quarterly or sometimes monthly. It all just depends. And this can be a very sticky resident, but generally there's a rule where they're not allowed to live there full time. So it functions more similar to that of a second home. Now, this is really convenient for residents because they know for a fact they have the place whenever they want to go. So if they do want to, in the last episode, we talked about the spontaneous weekend trips. They can do those as much as they want because they have a guaranteed spot in their second home. This can also be really popular in the snowbird demographic. And we find that these are most common along the coast. If you look at what Equity Lifestyle's done, ELS has done, one of the largest owners in the country, they tend to have a lot of their campgrounds along the coast and follow this model. Then you have your short-term campgrounds. Again, this is probably what the most common campground. This is probably what you think of when you think of campgrounds generally, right? This is sort of your KOAs. I think are a prime example of this, right? Where they're just sort of focused largely just on middle-class demographics. They offer usually fire pits on site. They may have a variety of different amenities. Usually they're going to have some sort of events day to day, or every weekend they'll have some kind of an event schedule going on. And this is just, again, your classic campground. And then you have your short-term resorts, which this starts to become, you could say certain Jellystones. You could even point out a lot of other RV resorts that are even higher end that we're seeing getting built day to day, where you'll find more of your middle class, but also to your upper class demographics. You'll see more of your Class A motor coaches in here. You'll usually have a higher price per night, sometimes north of $100 per night. They're either in great locations with natural amenities, or there's a ton of man-made amenities, including water slides, on-site restaurants, just really, really high-end luxury experience here. Everything you'd expect from what you'd consider to be a resort. So those are the 4 buckets that we've came up with when it comes to RV campgrounds. We'd love to hear more about what you think on this.
Yeah, awesome. Okay, so we have extended stay workforce housing. You tell me your contractor workforce, second home or seasonal, some short-term traditional campgrounds, as well as the short-term resorts or the luxury base resorts. So when we're evaluating potential deals, occupancy plays a big part into building out our pro formas. Can you touch on the different occupancy levels for maybe each different type of campground?
So occupancy can be really tough because you don't always have good comps to be able to measure off, especially if you're not super familiar with the market. So we're going to just speak broad stroke here. And again, guys, I hope you understand by now, but nothing we say here is set in stone. Even our views are constantly changing as we collect more data and better learn the space. But speaking towards occupancy, on extended stay workforce housing, it is not uncommon to see these at north of 90% occupancy. We've seen some that stay at closer to 100% occupancy. It largely depends on the makeup of your residence. Of course, the more annual stays, the higher the occupancy. If you have more monthly, you're going to have lower occupancy. I mean, we've seen some that are in markets that depend more on 1 or 2 specific sectors. We don't always like to be in those markets very much, but those, you may have to stress test that and see how those look at 50 or 60% occupancy, depending on the market, right? And then you have others where you have a steady, diverse job base that has consistent high occupancy year round. Then you have your second homes. Your second homes, these can really vary as well, but I'd say that generally on the seasonal sites or your second home sites, we will see these can be at the 90% or higher occupancy rate as well. But depending on the market, you may want to be prepared for 70% or higher, depending on the market and your price point. A lot of it just comes down to price, right? Some operators may only want to be at 80% occupancy because they want to be pushing price a lot each year. And others may be more interested in just maintaining long-term, loyal, sticky residents that want to be there for decades at a time. And they may get up to that 95% or higher occupancy on the second home model and stick that, right? We see people that have seasonals that have giant waiting lists. It's pretty common. Then the short-term campgrounds, I know generally speaking, rule of thumb is around 50% occupancy on both the short-term campgrounds and the short-term resorts. Now, these also can be different though, because it depends on how many nightlies you're doing versus weeklies versus monthlies, and if you allow annuals. A lot of the times you'll find combinations at campgrounds where you'll have campgrounds that will be 60 to 70% seasonal sites, with the remainder of them being short-term, right? So then you kind of have a blended occupancy rate where maybe your seasonals are staying at 80% occupancy, but then your short-terms are at 50. So your blended occupancy brings you up to 60% or somewhere along those lines. So again, this is one of the harder parts about RV campground investing. We definitely don't encourage anyone to take our rules of thumb or what we've seen on different campgrounds and just blindly run after underwriting a deal with a fixed rate of occupancy. I think you really, really have to get granular, look at every deal that's in your market, look at what the historical occupancy is telling you, and really put a lot of thought into formulating your view on how to assume your occupancy. The only other thing I'd mention at that point is that's why more than anything, we look at the EGI on a campground, right? What's most important to us is not exactly where the occupancy is, because we know we're never going to be able to predict that 100%, right? We have to look at what is an effective gross income that we believe is conservative and that we can hit it, whether we do, a combination of annual leases and monthly leases, or whether it's more of a short term and we're doing a combination of dailies and weeklies. We just want to look at the EGI and make sure that no matter how we cut the pie, we feel confident that we can hit those projected income numbers.
Yeah, there's really a lot that goes into it. It seems more art than a science.
Yes.
Not quite as clear cut or black and white as, say, the multifamily space.
Mm-hmm.
So yeah, we appreciate the insight into the different types of campgrounds. So with that being said, Dylan, do you have any final thoughts? Or
the only piece of advice I'd give to anyone that's actively pursuing RV campgrounds is save all of the data you can get your hands on. If you know you like a market, or even you think you might like that market in a few years from now, collect all of the broker packages, all the financial statements of every deal that comes across your desk, because there is no CoStar or any major data platforms that you can just buy your way into having a clear-cut view on the occupancy and the rates. So you really have to start to aggregate your own internal database to work off of.
All right. Well, great episode, Dylan. Thanks for sharing your insight as always. So with that being said, we will go ahead and wrap it up, and we'll see you next time.
Thanks for tuning in and joining us on another episode of Operators and Allocators, hosted by the Trecroce Group, a vertically integrated private equity real estate company. You can find recordings of all shows along with other resources on our company website, thetrecrocegroup.com, also listed in the show notes. A brief disclaimer to our listeners. Information presented herein is for discussion and illustrative purposes only and is not a recommendation or an offer or solicitation to buy or sell any securities. All investments are subject to risk, and past performance is no guarantee of future results. The views and opinions expressed by the Trecroce Group speaker are their own as of the date of the recording. Any such views are subject to change at any time based upon market or other conditions. We hope to see you next week.